going to start with sort of bits and pieces, and so this is not really in the latest legislation as such. But of course, dispute resolution is a huge part of tax practice at the moment. Tax controversy is the word that we use to cover this process. And so you'll see firms which have tax controversy sections, and that's really what they deal with, dispute resolution. And many of you probably spend a lot of your time working through the dispute resolution process. Now, the dispute resolution rules, up until about middle of July this year, we were still working with the rules from the Income Tax Act, believe it or not, even though the Tax Administration Act took over from the Income Tax Act in that respect from the 1st of October 2012. But of course, although the Tax Administration Act makes provision for a dispute resolution process, the actual detail that lies behind that comes through the dispute resolution rules. And those have to be promulgated through regulation, published in the Government Gazette. And it has taken quite a long time, all the way up until July this year, to get the new rules in place. They came out in July, they took effect immediately, but obviously SARS has been getting their processes in line with the new rules. And just the announcement on SARS website is that they are going to be updating the forms. So they will be cancelling all forms that are saved or pending on e-filing, and you will have to then lodge new forms, so just be aware of that. All NOO, NOA forms, and this is the statement from SARS website, will be deleted from the 5th of December. So just be careful. As you know, probably from nasty practice in the past, you know, when you assume life just carries on from day to day and nothing changes, suddenly you go on to e-filing and, you know, the world has shifted. So just be careful of that. This date has moved, so it's possible it might move again, I guess, but 5th of December is the date that has been identified, so just to be aware of that. Now, I'm not going to, unfortunately, have time to go through all the new dispute resolution rules. I know that there are other seminars that run from time to time covering that, so if you're involved and you want the detail, please look out for one of those seminars. Yes, sir? Okay. Yeah, I mean, it's an interesting question. You know, does this clock start ticking again? Strictly speaking, I would say no, because this clock really starts ticking from a fixed date which has happened. And that fixed date would be, you know, the date of assessment, or if you're going appeal, the date on which your objection was disallowed. So, unfortunately, I don't think it's going to mean that the clock starts ticking again, but you might need to just check that with SARS themselves. So your point that you would have to basically prove, yeah, you know, the onus again, you would have to prove that you did lodge on time, I guess, yes. So it's a little bit unclear at this stage, unfortunately, and transition processes are always difficult. So if in doubt, I think just check with the SARS call centre if you can get some ideas from them. Also, apart from the seminars that will run on the new dispute resolution rules, SARS has put out a document, Comprehensive Guide to the Dispute Resolution Process, a 149-page document, so if you feel so inclined. But I mean, you know, I say that in jest, but I mean, really, if you're working with this process, you probably would want to get your mind around all the detail of that. You know, also covering what your recourse is if SARS doesn't come to the party, etc., etc. So there's a big guide available on the SARS website. If you want just a brief glimpse, they also have brief guides, 2 brief guides available, one to the dispute resolution process and also to the ADR process in general. So have a look on the SARS website. They have guides available for you there. All right, so just that's just a practical note. And then on the employment tax incentive, as I say, I'm just jumping around covering a few little bits and pieces here and there, and then we'll get into the more meaty stuff. The employment tax incentive obviously came into effect from beginning of January this year, and there seem to be quite a number of people who are claiming the incentive. I'm not going to go through the whole workings of the incentive, because we did cover that in the last update. But of course, the issue is that should an employer be entitled to an incentive, the employer would claim that incentive on the EMP 201, right? So you say PAYE due to SARS, for argument's sake, 10,000 Rand, claim your incentive as a credit against that, and then you would pay the lower amount over to SARS. Or if it might indeed happen that your incentive is more than the PAYE that is owing, in which case you end up with a net sort of credit, unutilized ETI. and I'll explain just now what happens with that. There are some changes that are taking place around that. But let's just go back to the actual ETI itself. Of course, when you work out the employment tax incentive, the issue is you have employees, qualifying employees, if they're earning remuneration within a range, and this range is sort of between the minimum wage or 2,000 Rand if there's no minimum wage, or 6,000 Rand at the top end, then they're entitled to the employer is entitled to the employment tax incentive. The problem is that the Act talks about if your employee is not a full-time worker, you would have to gross up the incentive that you calculate. Well, gross up let's start from the beginning, gross up their remuneration, work out whether the remuneration sits within this band, work out the employment tax incentive on the grossed up amount, and then apportion it back down again according to what they're working in relation to a full-time worker. The employers actually asked for there to be more clarity around this. What exactly do we mean by full-time worker, etc.? And so the response has been that they're going to put in this baseline of 160 hours per month. So they'll say if a person is working 160 hours per month or more, we regard that as full-time. That's in terms of the contract of employment, obviously. So that's pretty much your 40-hour week. It also enables us to work out on an hourly basis what the incentive would look like, because you're looking at employees who earn between 12 Rand 50 an hour. If there's no minimum wage, that's the equivalent of the 2,000, broken down to an hour per hour basis, and at the top end, 37 Rand 50 per hour. So what would happen is if a person is working less than 160 hours per month, in this example here, we're saying a person works 80 hours per month. We would then gross up the remuneration, take the remuneration multiplied by 160 over 80 to get a grossed up amount. What would they be paid if they were working on a full-time basis? And then, as I say, check to see that they fit within the range, work out the incentive, and then prorate the incentive back down again. So multiply by 80 over 160 to get the incentive available for that employee. All right, so it does cut out a bit of the guesswork. Whether the 160 hours per month is appropriate, be that as it may, that is the amount that they've decided on. If the employee is working more than that, obviously you don't have to do any grossing up exercise, but obviously you need to make sure that the remuneration fits within this range before you go ahead and claim the incentive. Right. Then the other aspect on the ETI, let's get back to the refund situation. So if you're claiming an incentive that is more than what your PAYE is for the month, so let's say the PAYE is 10,000 Rand for the month, and your incentive is, for argument's sake, 13,000 Rand. So you end up with a 3,000 Rand credit. Now, if you were in the sort of January-February period, remember February is the end of your reconciliation period, and then you go into the next 6-month reconciliation period, which is March through to August. So the issue is, if you had a refund at the end of February, you would have just carried that over, because SARS at that stage did not have a process ready to pay the refund. And we knew right from the outset that this refund would never be paid on a month-by-month basis. The best that we would hope for is that you would get to the end of your 6-month reconciliation period, and then you would get your refund paid out by SARS. All right, but at the end of February, there was no process to do that. Scroll forward to the end of August, and of course these reconciliations covering March to August 2014, that's your EMP 501 form, that had to be submitted to SARS by the end of October, right, sort of a couple of weeks back. If there was any excess identified at the end of August, that excess, SARS has now explained to us, would be ring-fenced and identified for refund. The thing is that obviously when SARS comes to pay you out that refund, they would look on their system to see if you're green for go in terms of being tax compliant currently. All right. You would have to have been tax compliant when you claimed the ETI, whenever it was that you claimed it in that month, because remember, you're not entitled to an ETI unless you're tax compliant. But they would then look on their system to see, are you tax compliant at this point, let's say today, if they're going to process these refunds today, is the person tax compliant? If they're tax compliant, presumably they would pay out those refunds. If the person's not tax compliant, SARS would hold back on the refund until the person gets their tax affairs in order. Now remember that when we talk about tax compliant, that means no outstanding returns and no outstanding debt. And by outstanding debt, we mean an amount that's gone past the due date for payment. So we're not just saying there's an amount owing to SARS. We're saying it's outstanding, it's gone past the due date. That would make you not compliant. And that means SARS would not pay out that refund. They'd wait until the taxpayer gets themselves tax compliant and then pay it out. But what is changing in the legislation is that they've now put a fixed period in place here. And they're saying that the employer has 6 months, in other words, until the end of that particular reconciliation cycle, to get themselves tax compliant. So now let's say this cycle is going to run from September through to February next year, right? If the taxpayer is not tax compliant by February next year, then that refund will be cancelled, forfeited. And that's a significant change that has happened, because that was not in the original legislation, but it's in the legislation that's sitting before Parliament at the moment. Yes?
What stops the company from utilising that credit in September?
Okay, to utilise that in September, unfortunately, SARS has said no carry forward. All right. So what they're saying is that you would have to have this in pockets. All right. So let's say that your refund arose, well, it could have been January, February, because it was seamless through to the next 6-month period. But certainly if you get to the end of August, you've got a 3,000 Rand refund still, or credit, let's call it a credit at that stage, sitting there. SARS has said you can't carry it forward, and they're changing the legislation to accommodate this. So you would have to identify that at the end of August for refund. That becomes an amount owing to you by SARS. And they're saying you can't carry it forward to the following period. So just to give you a bit more detail on that, so they've got all this detail on the website. I'm not going to go through it all. You've got it on the slides in front of you. But basically, so they're saying the only time a rollover amount will be carried forward to the next reconciliation would have been at the end of February, when there was this, it wasn't a clear cutoff on the refund. But going forward, if we go through to the end of August, they're saying here may not be carried forward to the September 2001. Okay, so unfortunately, it does provide this sort of pocketing, as I say, that you're limited within that 6-month period, and then you must look at getting the refund back from SARS. And they would then consider, are you tax compliant, and consider whether they're going to pay it back to you.
What does that mean by tax compliant?
Tax compliant, as a...
I have a client who wanted a tax clearance. Excuse me, the taxes were totally up to date. They said she was not tax compliant, because their VAT system didn't talk to income tax. And on the VAT system, they had the old new ID document number.
Okay.
And they said she wasn't
Not tax compliant. Okay, so in your example, they were saying she wasn't tax compliant on the VAT side because supposedly her ID book was not valid, as it were, although she was applying for a tax clearance certificate. You see there, yeah, tax clearance certificate, basically it means on SARS system they must indicate everything's up to date. You would have experienced this when you had to register as tax practitioners as well. I'm sure many of you probably then discovered that SARS didn't like your ID book, etc., and you had to then go and fix it, or your proof of banking details. I know I personally had to sit there for a few hours to prove to them, even though my bank account hadn't changed in the last 10 years. But we know that these things happen. So in essence, when we're saying tax compliant, it's the same status that would be in question were you to apply for a tax clearance certificate. That's it. All right. So it's exactly the same process. Now, unfortunately, there are problems that happen from time to time, but the thing is, tax compliant means on SARS system, you green for go. All right. That means according to them, everything's up to date and okay. So if in doubt, you would need to establish that with them. But otherwise, you'll soon find out when you wait for your refund to come back to you and it's not forthcoming, because SARS would advise you that you're not tax compliant. All right. So this is where we are at the moment. Now, the issue is, so just to reinforce what you were asking about, again, SARS makes a point, any ETI carried forward at the end of August and going forward at the end of every 6-month period, you would not be able to take a credit into the following 6-month period. You'd have to identify the credit, and that would be an amount to be refunded by SARS. Okay. Now, quite an interesting point, also a practical issue on ETIs. What about errors where you've claimed the wrong amount of an ETI on a previous EMP 201? Either you've overclaimed or you've underclaimed. Well, the easiest one to sort out is where you've underclaimed, obviously, because SARS doesn't mind if you've underclaimed too much and overpaid PAYE. That's not too much of a problem. So what you would do is on the next EMP 201, you would claim whatever the underclaim was. All right, so you fix it up on the next EMP 201, and you just show it under ETI calculated for that month. So let's say that you suddenly realize today the ETI is around, you haven't claimed it since the beginning of the year, but perhaps you could have claimed it. Even though we're now into a new 6-month cycle, you can still go and claim what you could have claimed since January, and you just claim it on the next EMP 201. All right, so that's very straightforward. Of course, it's not so straightforward if you've overclaimed your ETI. Because if you've overclaimed your ETI in a previous month, let's say you've claimed ETI for someone that you thought was a qualifying employee, it turns out that they're not. Or you've got the calculation wrong, or whatever the case might be. So if you've overclaimed in a previous month, you can't just fix it on the next EMP 201. I mean, if you think about it, you claim the ETI as a credit against your PAYE. If you've overclaimed that credit, you would almost have an add back on the next EMP 201, and it doesn't work like that. There's only one direction for an ETI, and that's a deduction from PAYE. You can't have an add back. So what you would have to do is you'd have to go back and revise the old EMP 201. And that's going to be a bit of a mission, especially if you've submitted the EMP 501 in the meantime. I would imagine that's going to require a little bit of administrative manipulation, not manipulation, but navigation is the word I'm looking for, not manipulation, right? All right. Okay, so it is going to require a bit of navigation to get that right, but you would have to go back and resubmit the old EMP 201 and the 501 as well. And then SARS also gives all of this information around the ETI process, and I thought it's just useful to put it up there, because obviously when SARS gets those EMP 501s at the end of the 6-month period, and they are now processing amounts for refund, etc., they obviously are going to look at those refunds quite closely, effectively auditing the refund, and they would come back to employers, they say, within 21 business days if there's any queries or disputes around what's been calculated. Now, I heard via the grapevine that SARS is coming up with quite a lot of these queries at the moment, that they're identifying quite a lot of claims that they feel are not correct, etc. It remains to be seen as to whether, who's proved correct at the end of the day. But you can expect to get quite a few of these queries coming through. We're still within this 21 business day period. If you count from the end of October, 21 business days for the latest EMP 501 that has been submitted. And then if they make any changes, they will show that on the employer statement, etc., etc. But just be careful, because if you've overclaimed the employment tax incentive, remember, that means that you've underpaid PAYE, and that means there's going to be an underpayment penalty, the 10% underpayment penalty. So do be careful of that. Should you be charged the understatement penalty, the late payment penalty, the 10% late payment penalty, remember you would then have to look at the Tax Administration Act, the appropriate chapter, and then look at whether you can apply to get that penalty reversed. Based on first offence, sorting out the problem quickly, etc., etc. So there are avenues that you can follow, even if a penalty is charged. Okay, so quite interesting just in terms of the process with the employment tax incentive, and it's useful having this guidance from SARS. Have a look on the e-filing website, on the SARS website. They may, have updated this in the meantime and then have more information available for you.